Welcome to the first Themes Talk in 2021. We will bring interesting and innovative products to our investors. Right now, COVID brings a lot of challenges, but also give a lot of interesting opportunities, which we are going to discuss today. Before we jump into the Swissquote recovery theme, let's talk a bit about thematic trading in general. I'm not sure if people really know how it's different from traditional investing.
Well, Cyril, thanks for having me today. You're absolutely correct. Traditional investing depends heavily on sort of nice, orderly terminology to help define a portfolio strategy. Terms based on sort of asset class, market capitalization, geographic location, sectors, and then companies' sort of backwards-looking fundamentals like sales and earnings growth, are all used to create sort of very rigid portfolios. And this makes sort of traditional investing very complicated and unapproachable for most retail investors. And what we see in thematic investing, it really does break down these constructs. The goal of thematic is to encompass or to wrap investments around an idea, an opportunity, a driver. And the investor is less concerned about investment terms or rules, but more about capturing the core driver. And so secondly, thematic portfolio approach is less concerned about picking great stocks based on sort of historical performance than locating the leaders of growth in the future. So the thematic approach works best in a portfolio level where you invest in all the components involved in the growth catalyst. Some stocks will do well, others will do poorly, but the overall result should be an outperformance. So this really makes sort of thematic investing much more logical, practical, and easier to use for the average private investor.
All right, very interesting. So therefore, it's a simpler and easy investment approach. Is that correct?
We think so. Sort of lack of archaic language and ceremony that's used in traditional investing or bottom-up investing makes thematic investments much more logical and easier to use. And it's important to understand that just because it's understandable doesn't somehow make it less credible. The macro hedge fund managers globally have been using the thematic approach for years successfully. There's no reason why private investors can't take the same macro approach.
You mentioned that currently, now in January 2021, it's a great time to use the thematic strategy. Can you explain that a little bit more in detail?
The COVID pandemic really caught everyone off guard. No one expected the profound social and economic changes that had occurred, and more importantly, what the future holds, what the future will look like when we normalize. And this gives non-professional investors a much more fair opportunity to locate growth potential. Let's just think about it. What happens when a professional analyst plugs in 2020 corporate fundamentals into one of their models? The output will be really hard to invest in given the collapse of revenue and such. But using thematic investing, by focusing on the future, will the consumer still use the product in a year's time? Therefore, private investors can really have the opportunity to think through these ideas on an equal playing field to professionals as well. And in the longer duration, COVID has accelerated sort of key trends. COVID broke old behaviors, old norms, and sped up sort of innovation. Take Disney, for example. They basically pivoted to an online distribution model in less than a year. Extraordinary turn of events. We've seen other trends. We've seen trends in the sort of consumer economy where the consumer is demanding physical buying as frictionless as possible and the ability to make e-commerce effortless. It also means that it includes cashless payments. So a huge ability for IT to step in. We also saw the change in the workforce. Pre-COVID, workforce was basically at the office. The pandemic will now require companies to rethink these policies. And we're seeing a huge amount of IT develop and innovate around this idea. Corporate globalization. It's too early to say the long-term effects, but pre-COVID, companies really only thought about where could I source cheap products. The destruction of the supply chain really will force companies to reconsider where they get their goods from. So it's important to see that there are massive shifts that have occurred, and themes trading helps, or thematic investing helps, realize those opportunities.
All right, let's discuss now the new recovery theme. What is the investment thinking behind this AMC?
Well, I guess it's kind of obvious. The COVID and its mutation are still holding down society. Growth is weak. The new virus outbreaks are still occurring, but we think overall the economic recovery will happen faster than most people believe. So first of all, you have the vaccines, which are slowly making the rounds. Yes, Europe, it's even slower than most places. But secondly, society is learning to live with these restrictions, whether it's social distancing, face masks, reduced gathering. And this means that the return to normal is nearing. This also means to us that companies that have been performing, very well pre-COVID should come back. They won't just disappear. And although we've seen a massive V-shaped equity bull rally, where basically everyone bought everything, there are areas in the global economy that continue to suffer because of COVID. And they're still concerned about the business in the short term for revenues and cash flow standpoint that really haven't gotten that investor bounce that really have been priced in. We're expecting the annual estimated earnings growth rate for 2021, say in the S&P around 20%, and this is well above the 10-year moving average growth rate. So it means it's going to be a very good year for stocks as people do price in this return to demand. So the areas that were hit hardest by the pandemic will start performing well. And this is sort of the basis for our recovery AMC.
Sounds very interesting. So tell me a bit about the different industries in the portfolio.
Sure. So we start off with sort of casual restaurants. They had a very difficult time shifting to a takeaway business model. We also saw aircrafts and aircraft parts. We saw about 70% of the global aviation fleet was grounded. They couldn't get bodies into the seats, and this destroyed revenue. Leisure facilities and services, people stopped going because of the fear of the close proximity to other people and COVID. Amusement parks, we saw revenue for that segment fall over 85%. Lodging, lodging was one of the first industries that were really impacted by the pandemic. We saw businesses and group travel disappear and is not expected to reach 2019 peaks until 2022, 2023. We also added in integrated oil. Global demand for oil and gas products basically crashed. Oil prices fell dramatically in the early stages of COVID-19. And this made the big players, just see earnings disappear. But we're seeing demand come back, and we're already seeing the oil price continue to improve.
And this theme is already tradable on the exchange, is that correct?
Yeah, that's correct. The recovery we launched it on the SIX exchange as an actively managed certificate, and it's been running for about a month now.
And last question, Peter. On what other teams are you working on currently?
Yeah, we have a really exciting pipeline already. Great opportunities. Clearly, we can't say too much right now, But we are very interested in the global reflation story. The team that manages themes trading have also all been market analysts at some point in their career in the past. And this gives us a really unique insight into develop new thematic ideas. So what we're seeing is that the expected impending demand boost, which is expected as the world sort of normalizes, will bring an accelerated level of inflation. Now, when you combined monetary and fiscal stimulus, as the U.S. is receiving another $1,400 per person, there are assets, not just stocks, but also commodities and other type of real estate products that should continue to benefit as inflation ticks higher.
Really interesting and timely discussion. Thank you very much, Peter, for sharing your thoughts on this subject.
Yeah, thank you, Cyril, for having me. I look forward to talking to you in the future.
Thank you for watching and trade successfully.